In this video, I'll analyze the Q1 FY26 result and Concall of Aptus Value Housing Finance. So let's start with the company overview. So Aptus Value Housing Finance is an affordable housing finance company. Around 60% of their AUM comes from the housing loans, affordable housing loans, and then another 20% of their AUM comes from the business loans, MSME business loan, and they mainly cater to the self-employed people. More or less 80% of their AUM comes from the self-employed category people. Okay, and their average ticket size is around 9 lakh to 10 lakh rupees. And if I talk about the geography, they are mainly present in the tier 2, tier 3, tier 4 cities of Andhra Pradesh, Tamil Nadu, Telangana, and in the recent past they have entered the market of Maharashtra and Odisha. So that is the geography. So let's talk about the result in the Q1 FY26. In terms of their AUM, in this quarter they grew their AUM by 24%. And if I look at their guidance, they have been guiding us for a 28 to 30% of AUM growth, but somehow for some reason they are missing the guidance regularly. So that is one bad point about Aptus Value. The main dragger of their AUM growth is the Tamil Nadu. If we look at Tamil Nadu, they had some kind of a issue in the last few quarters. I mean, the issue have more or less solved, but if we go back 2 quarters, then we can see there was some kind of a issue in terms of the attrition. Okay, so that is the point. But if we look at the Tamil Nadu's AUM growth trajectory in Q3 FY25, the Tamil Nadu AUM grew by 11% in that quarter, whereas now in this quarter they grew Tamil Nadu AUM by 15%. So the growth is coming back in the Tamil Nadu state. And if we see the contribution of Tamil Nadu state to their AUM, it is around 30%. Okay, so they have a good kind of a contribution from Tamil Nadu, and the management is expecting the Tamil Nadu to pick up from here. They are guiding us for a 18 to 20% growth in Tamil Nadu in this year. And if we look at their other states, in this quarter, Andhra Pradesh AUM grew by 29%, which is above the company's average. And then Telangana also grew by 29%, and the only dragger is the Tamil Nadu state, which grew by 15% in this quarter. So that is the point here. And at an overall level, the management is guiding us for still guiding us for a 28 to 30% of AUM growth in this year FY26, and in the long term they are guiding us for a 25,000 crore of AUM by FY26, which reflects around 25% CAGR AUM growth for next 4 years. So that is the guidance from them. Okay, so that is the point with AUM. In terms of the disbursement, in this quarter the disbursement was pretty low, mainly because of the management is saying that the disbursement was affected by the month of April and May, but they have come back. I mean, the disbursement has been good in the month of June and July. In the June and July, they done a run rate of like 350 crore in the month of June and July, which reflects around 1000 crore disbursement per quarter. Okay, and in this quarter, I mean Q1 FY26, the disbursement they have done is 775 crore, which is around 15% growth year on year. And as I said, the growth has been a problem in terms of disbursement in this company. In the last quarter also, the disbursement growth was at 10%. Okay, so that is a thing which they have to work on, but they are saying that in this year FY26 they will achieve a disbursement growth of 22%. So if we look at the target, they are targeting a disbursement of, I think, 4400 crore in this full year FY26, and to achieve that 22% growth in disbursement, they have to uh, achieve a number of disbursement number of 1200 crore per quarter, which is like they are now at 800 crore, and they have to do 1200 crore per quarter. So that is a, I mean, difficult thing to do, but they are saying that in the month of June and July they achieved a run rate of 350 crore of disbursement. So if we see the run rate, then they are going at a run rate of 1000 crore per quarter. Okay, so they have to do a little bit more work to reach at that level of 22%, but as of now it is looking difficult, okay, to achieve that number. So let's see what happens, how they would able to execute their guidance. We have to see that, but as of now it is not looking very promising in terms of the disbursement. Okay, in terms of the asset quality, GNPA, if we look at their GNPA year on year increased by 20 bps, and quarter on quarter increased by 30 bps. And if we look at the peer like India Shelter, Home First and Aptus, okay, then you can see one thing, that the GNPA of Aptus value has increased the most in this quarter. Like India Shelter's GNPA increased by around 20 bps in this quarter, whereas Home First GNPA increased by 10 bps in this quarter. And if we look at Aptus value, that has increased by 30 bps in this quarter. So why? What is the main reason behind this? So the main reason behind this is the segment they are in, because if we look at India Shelter, they do not have any MSME or business loan segment, whereas if we look at Home First Finance also, they also does not have any kind of they also do not have any kind of MSME loan segment. But in Aptus value they have a MSME lending, they also provide offer MSME loans. So that is why, because we can see that what is going on in SBFC and 5-star finance, so that is why the GNPA increased a little bit more with Aptus value. So that is the point with GNPA number. In terms of the collection efficiency, but again if we look at GNPA year on year GNPA increased by 20 bps, which is more or less in a good range if I see. Okay, so that is the point with GNPA. In terms of the collection efficiency, in this quarter the collection efficiency year on year collection efficiency has been flat, if we see the collection efficiency, but if I see monthly, the management is saying that the April and May was challenging in terms of the collection efficiency, but if we see the June and July number, that has been pretty good, because the collection efficiency came back to a level of 99.5% in the month of June and July, which is the normal level if we look at the collection efficiency number of June and July. So the management is pretty confident that we can go in a similar kind of a range of 99 to 100% going forward. So that is the point with collection efficiency. So the management is saying that there should not be any kind of a issue in terms of the collection efficiency going forward. So that is the point. In terms of credit cost, in this quarter credit cost was at 38 bps, quarter on quarter increased by 8 bps, which is like I would not say that it is bad. It is very good that credit cost has not increased by a very big number. 8 bps is good enough, I would say. So that is the thing, and they are guiding us for a 40 to 50 bps of credit cost. And if we look at their guidance also, they have been guiding us for a 40 to 45 bps of credit cost for a long time. So yeah, they are at below of their guidance because they are at 38 bps now. So good kind of a thing with credit cost. In terms of the cost of borrowings, the management is saying that in their incremental cost of borrowings, they are getting a, in terms of the incremental cost of borrowings, they are getting a 60 bps reduction, mainly because of the interest rate reduction in terms of the RBI, and also they got a credit rating upgrade in the last quarter. The management is saying that the incremental cost was at 8.7% in the HFC housing finance company, whereas now they are getting a borrowing at a rate of 8.05%. Okay, so if we look at their trajectory, I mean, that is very good that they are getting a 60 bps reduction in terms of the incremental borrowing. So that is why we can expect a better spread and better NIM going forward, because they are also saying that in terms of the portfolio weight, the rate they are lending, because of 80% of their loan book is at fixed rate, and they are saying that they are not going to pass on the benefit to their customer. So that is why they can get a better NIM and they can get a better spread. So that is a really good point, and we should expect a better spread going forward. Obviously it is not going to happen in the next quarter only, because it is a incremental book. It is the rate reduction, the interest rate reduction is in incremental borrowing, not the full borrowings. Okay, so that is the point. So but going forward we can expect a better spread, a better NIM. So that is the point, and because of the better NIM and better spread, we can expect their ROE to increase from here also, because if we look at their ROE now, that is at 20% now, and their ROE increased by 200 bps year on year, which is very good kind of a increase in terms of the ROE. Okay, so that is another point. And because they are getting a better they are going to get a better spread and net interest margin, so they are expecting a better ROE, and we can also expect, obviously, because if the spread and NIM improves, obviously the bottom line is going to improve. So that is why we should expect a better ROE going forward, and they are saying that we are looking to achieve 22% ROE as soon as possible. So that is the point with ROE. Okay, in terms of the PAT, in this quarter they grew their PAT by 27%. So they got a little bit of operating leverage, so it's okay, mainly because of the, I think, the spread and NIM. Okay, so that is the point with the PAT, and going forward we can expect a similar kind of a PAT in Aptus value, I mean PAT growth in Aptus value, because of the spread and NIM. So that is the point. And if I talk about the final what is my thoughts about this company. I would like to see Aptus value growing at 28 to 30% run rate. Okay, so and if they can do it, then the whole I mean the whole thing of like offers, like what I am getting as a AUM growth, what I am getting in terms of the ROE gets better. Okay, the whole, I mean, I am not getting the word, but the whole deal becomes better if they can grow their AUM at a pace of 28 to 30% rate, because they have a high ROE. One thing is there, and they have a low cost of credit cost also. So that is where they can improve, I think, because they also will get a better spread, better NIM. So if they can able to grow their AUM at a high pace, obviously the deal is going to be more lucrative. If we see the valuations also, I think that is the point I would like to say in terms of the Aptus value. Okay, so I do not think I have left anything to say here. And another thing, they are growing at a high pace in Maharashtra and Odisha. They are looking to grow at a high pace in these two states also. So that is where they can improve their AUM growth. But also Tamil Nadu is going to play a very crucial role in terms of the AUM growth, because all of their state except Tamil Nadu is growing at a good pace. Like Andhra Pradesh is growing at 30%, Telangana is growing at 30%. The only lag has been Tamil Nadu. So that is the point. So that's it for the video. Thanks for watching.